Hey everyone! Welcome to another week of financial insights with FxPro. From shifts in the markets to the latest in crypto, we're breaking down all you need to know. Let's jump right into it. Here's a quick rundown of the latest from the US. We've got some positive numbers rolling in. Consumer and producer price growth surpassed expectations, and retail sales are on the upswing, mainly due to the rising fuel costs. On the job front, the weekly jobless claims numbers are better than anticipated, indicating that as prices rise, people are both spending and actively looking for work. Given this strong data, it might come as a surprise to some, but the markets seem to be anticipating a softer monetary policy approach. Yet, all these indicators suggest that the central bank might ramp up efforts to tackle inflation. While this scenario typically boosts the dollar and isn't the best news for stocks, we've seen the dollar grow modestly and stocks thrive. As always, the financial world keeps us on our toes. Now let's talk gold. It's been a bit of a downhill journey this week, but we saw a bit of support around the $1,900 mark. It seems buyers are stepping back in whenever we approach that critical round number. But if we zoom out and look at the bigger picture, gold's trend for a medium to long-term perspective is leaning downwards. And here's the kicker. The fate of this trend? It might be in the hands of the Fed. Will they flip the switch? Only time will tell. Let's touch on the US market. We've seen a bounce back, with a lot of that energy coming from hopes surrounding the Fed easing up and solid consumer demand. Particularly, our tech-focused friend, the Nasdaq 100, is holding on to that upward climb. However, there's a looming concern. Do people have enough in their pockets for more stock buying, especially after handling all their bills and loans? It's something to keep an eye on as we navigate the markets. This week, we're seeing oil prices hitting their highest since last November. US WTI crossed that $90 mark, and Brent has been dancing in this range since the week before. Now, if we're looking short-term, it feels like oil might be overheated. We could see a slight pullback before the real rally continues. But looking ahead, don't be surprised if we see oil surpassing $95 for WTI, and Brent reaching that big $100 mark. Here's the thing. The US Strategic Reserve is running low, and US oil production isn't filling the gap caused by those OPEC cuts. That's a deficit of 3 million barrels every day. So as we approach year-end, the oil scene is setting up for quite the show. Diving into the world of crypto now. Early in the week, we saw a brief dip, with Bitcoin dropping to around $25,000, bringing the whole crypto market's value close to that trillion mark. Seemed like a shakeout, getting those onshore investors out of the picture. But guess what? Buyers jumped right back in, pushing the price beyond $26,500, levels we haven't seen since early September. But the big takeaway here? It feels like the market's mood is shifting. There's a growing confidence that maybe, just maybe, the worst of the sell-offs is behind us. As we look ahead to this coming week, the spotlight's shining brightly on the Fed's rate decision set for Wednesday evening. Most market insiders believe the rate's going to stay put, but the real suspense? It's all about the hints we get on what might come next. The consensus is that the Fed might leave some wiggle room for future hikes, but don't expect them to make any move this September. The big question on everyone's mind: how's the central bank feeling about its battle against inflation? And trust me, there are some mixed feelings in that arena. Now let's break it down a bit. If the Fed's main guy, Chair Powell, talks up the economy's robust health, that might boost the dollar and weigh down on stocks and commodity prices. Why? It's the market's way of thinking the central bank might step in and slow things down by making money harder to come by. On the flip side, if the mood's more about satisfaction with declining inflation or concerns about a sluggish economy, that's the market's cue to take a deep breath. We could see a shift towards selling off the dollar and grabbing more stocks and other assets. But come Thursday, our attention pivots to the Swiss National Bank and the Bank of England's rate decisions. Over in Switzerland, they seem to have their inflation situation handled, so no dramatic rate changes are anticipated from their current 1.75%. The Bank of England? Now that's a different story. There's a bit of a mystery there. They might pause or they might hike those rates again. If they opt for a break, the pound might continue its downward slide, which in turn would push prices up. Not really what the Bank of England wants, especially when inflation in the UK is sitting at the top among developed countries. That's a wrap on this week's financial highlights. Subscribe for more insights, and until next time, stay savvy.